Household debt is increasing. I gotta say the economy though is doing okay as people have jobs, there's low unemployment, wages are up from last year, and also too, there has been a nice increase in people's net worth. One downside people see is with a growing economy, we will see US household debt increase, which it did in the fourth quarter of 2024, hitting $18.04 trillion. This was a 0.5% increase from the third quarter. The debt increase was across the board, which means it includes mortgages, car loans, credit cards, and even student debt as well. Because of the economy growing, it is normal to see debt rise, but unfortunately, it will hit the lower end consumer first. They will feel more pressure and delinquency rates will likely increase, which did happen in the fourth quarter as the 90-day delinquency rate stood at 1.7% for all household borrowing, and that looks at 90 days or greater essentially. This was an increase of 0.3% from the fourth quarter of 2023 when it was 1.4%. Credit card delinquencies are always the first sign that the lower end consumer is starting to have problems. The total delinquency rate climbed from 6.4% a year ago up to 7.2%. A bad sign is seeing the delinquency of auto loans, which did increase to 3% from 2.7% 1 year ago. The reason why this is more concerning is because while consumers do hold the asset of the car, if they don't pay the car, well, it could then be repossessed. The main issue here is cars are generally a depreciating asset, unlike a house, for example, which generally appreciates. I don't see any reason to panic at this level, I gotta say, as we are coming from a position of strength. But I must point out, it is worth keeping your eye on. If this does deteriorate further, maybe there could be some concerns. As I said, right now, I think we're okay. What's important to remember is the economy is larger, so we will see more debt on the consumer's balance sheet. We just want to make sure assets and incomes are progressing near the same rate or faster than those debt levels. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.